Guys, you're very welcome this evening to this evening's webinar. People are just entering the waiting room, so I'm just letting them come in. We're just up to a couple of hundred participants at the minute, so I just want to make sure they're all here. So I will give it a couple of seconds before I kick on.
Everyone must be very interested in retiring early if we've so many logging in after hours.
Right, guys, I'm conscious all of you have taken the time out this evening to come to this evening's webinar. So I'm just going to get started. So just a couple of kind of housekeeping before we get started with the information this evening. Just to note, it is very general information we'll be telling you today. So it's not specific to each individual scheme that you might be on. So what we would encourage and what you will see on each of the slides is a QR code. That QR code brings you to an application form to fill in. It'll take you 2 minutes just to put down your details to schedule an in-depth screening call. So you'll hear a call throughout today's presentation. So what that really entails is we, as financial advisors, have a good chat with you to see if a financial review would make sense for you and your circumstances. So if you see the QR code and if you hear things that you'd like to hear more information about how they'll impact you, fill in the QR code and fill in the application form, and then we'll be in touch to schedule in your financial consultation and screening call. So what I'll do is I'll just run through kind of this evening's agenda. As I said, we won't keep you too long. You'll be out by 7:30, so you can go have your dinner if you haven't done so already. So I'll just go through what we're going through this evening's presentation. So I'll kind of go through why public sector staff like yourselves meet with us or sit down with a financial advisor. We'll have a look at your main superannuation scheme, what benefits you already have in place, and then we'll have a look at your financial goals and what to consider during a financial consultation. We'll then touch on the AVC scheme, which we run through the public sector's AVC schemes. So we'll have a look at what that entails, how they work, and then we'll have a look at could you benefit from a financial consultation. So do you want to sit down with the financial advisor and find out more about your own circumstances? We'll then touch on the 5-minute screening call. So as I said, QR codes, you can see that one on your screen at the minute. If it's something you want to engage in, we'll give you a call, go through your own circumstances just to see if a financial consultation is in your interest before booking you in for one. We'll then touch on mortgages, and then we'll open the floor for question and answer. So the chat box will be open at that time and we'll respond to as many questions as we can. Now, if there's any specific questions relating to your own individual circumstances, we would ask that you would ask them during your screening call with an advisor, just because we can get really into the weeds with it then. There will also be a quiz, so €100 voucher, just one question, just to make sure you're all paying attention. So what we'll do is we'll ask you a question at the end, and the nearest answer or the right answer as such who comes into the chat box will be in receipt of €100 one for all voucher. So it's just something to kind of think about when you're listening into all the information tonight. So I suppose what I'll go on to next is who are we? Who are myself and my two colleagues speaking this evening? So myself, my name is Rebecca Keogh. I'm a qualified financial advisor. We have John Kennedy, who's going to speak after me. He as well is a senior financial planner, and same with our other colleague, Georges Alibi. He's also a senior financial planner. So together we have 18 years combined working with people like yourselves in the public sector. So we are experts in public sector financial planning. So we should be able to handle any questions you throw at us during your financial consultations themselves. So we have a huge amount of experience and we're constantly learning new things every week in order to better ourselves and become more professional. So who are Irish Pensions and Finance? So Irish Pensions and Finance are an independent brokerage and we're based out in Clonee in County Meath. We do run the Payroll Facility Group AVC scheme, which is, however, with New Ireland. But as we're an independent broker, we can shop around for you in terms of alternative financial products that you may need or we may be recommending to you. So we look after you as clients. We have a team of financial advisors, and I think there's about 50 at the minute. So we're constantly growing and developing the company. So we're all experts in public sector financial planning. And we have over 25,000 public sector clients, such as yourselves in the meeting today. But I could talk all day about how great Irish Pensions and Finance are, but we do have some Trustpilot reviews from our clients that will just show you how good the service that we offer is to our existing clients and new prospect clients as well. So I'll just leave them on the screen for a couple of seconds just to let you read through them. But we do have an expert dedicated financial advisory team there to answer all your questions and to go through your financial consultations with you. So just before I hand you over to my colleague, John, just kind of a couple of reasons why public sector staff like yourselves sit down with a financial advisor. So you may fall under one or more of these different areas, but just to kind of get you thinking as to why you might sit down with the financial advisor. So you may have a shortfall in your main scheme benefits. So what this means is you may have started working late in the public sector, and we're seeing this more and more often. So that would lead to a shortfall in your service when you do get to retirement. So this will have an impact on what you're going to receive when you do get to retirement age. You may have spent time working abroad. For example, we see people working from the UK, Australia, the US all the time. So you may have benefits accrued abroad, which one, we can have a look at, but two, it would also have an impact on what your service is when you do get to retirement in the Irish public sector. You may have been job sharing or reduced your hours, which is a great thing that you can do in the public sector. You can reduce your hours and you can job share to look after the kids or a family member. But it does have an impact on what your retirement benefits are going to be. So again, this is something we go into great depth with you during a financial consultation. You may have taken a career break, and again, this can have an impact on your service, but as well as that, you may come in on a different pension scheme if you are to return. So this could have an impact on when you can retire and also your entitlements when you do get to retirement. You may have some non-pensionable employment, so this would be the likes of overtime and allowances that aren't subject to pension. Now, we can have a look at how to reduce your tax bill in line with these overtime and allowances if they're not entitled to any pension benefits when you do get to retirement. But again, if this is applicable to you, we will go through this with you in greater detail during your financial consultation. Another reason why public sector staff meet with us, they just want to retire early. And this is a thing we hear all the time. And again, this is really, really common. I don't want to work till 70. I certainly don't. But a lot of our clients are coming to us wanting to retire that bit earlier. So again, this is what we go through during your financial consultation. There may be a gap before your state pension kicks in. So as we know, the state pension is applicable at age 66 now, but that is due to move out. So it's just about making sure that if you do have a gap in your service from when you retire to when you receive the state pension, that you're bridging those shortfalls, and we're looking at different options if there is a need to do so. You might be on the post-2013 scheme, which if you are, we would highly, highly encourage you to sit down and have a review. This is when things changed completely, how your pension's calculated and what benefits you're entitled to before and after retirement. So if you are on this scheme, please do sit down for a financial review and book in a screening call to go through what it means for you. You may have had a significant life event, such as buying your first home or second home. You might have got a promotion, you might be getting married, you might have had children or what have you. So these are all big changes, not only in your life, but they do impact you financially. So we want to make sure that firstly, you're prepared for all of these different scenarios and that you have a plan in place financially to come into effect to help you out. So we will sit down and go through your financial goals, objectives, and make sure that you're looking after yourself financially in all the different scenarios. You might want to have a look at your savings and investments and the effects of inflation on those savings and investments. So again, this is something we go through in great detail with our clients. We have a look at if you're saving, what you're saving for, if it's in the right place to meet your short, medium, and long-term goals, or if we need to look at alternative options for you. So I know there's a lot of information there. You may fall under one area, you may fall under two, or you might fall under all the different areas above, but we would encourage you to book in for your screening call so we can go through with you in greater detail. So I'm just going to pass you over to my colleague, John, now, who's going to go through the next slides.
Perfect. Thanks, Becky. So guys, you're welcome tonight. I suppose what I'm going to go into a little bit of detail on what benefits you actually already have in place with work, okay? So it'll give you some understanding of what, generally speaking, you have and what you're paying for already with work, all right? We're going to go into a little bit of detail on two in particular. So first of all, we're going to look at your pension. So everybody here is accruing a pension with work, which is a guaranteed income up until the day you die. And you're also accruing a lump sum. What your pension and what your lump sum are going to be will very much be dictated by when you join service, how many years of service you have, and what pension scheme you're on. So the next couple of slides will give you a better understanding of which one you fit into. But just for today, I'm going to touch base on a couple of other benefits you have in place as well, because it's very important to know what you have in place through work. The next one is what's called an illness benefit. So everybody here knows this one in general. It's 3 months of full pay and 3 months of half pay. Now, there are policies you can take out if you're concerned about going out sick and not being able to pay the bills or pay your mortgage, and you're concerned that if you were out further or longer than 6 months, what would you use to pay, or what would the income be? So you can use policies like income protection. If you haven't heard of income protection, essentially it's a policy that you can take out with an insurance company that will give you an income up to 75%. And the very nice thing about income protection, which people often don't know, is that you get tax relief on the premiums. So essentially the government will pay for 20 or 40% of your policy, depending on what tax you're paying. The other benefit then, and sorry to be getting a bit morbid in all this, is a debt and service policy. So everybody here will be entitled to a minimum of 1 times your salary as a lump sum paid out if you were to die, all the way up to 2 times your salary. Again, this will depend on what scheme you're in and how much service you have at the time of death. Now, I was asked a very good question one day: do you have to be in the building at the time of your death to get the debt and service benefit? You don't. As long as you're employed by the public service, you are entitled to some form of life cover. The other death benefit then is what's called a spouse and children's benefit. It used to be called widows and orphans. Essentially what happens here is a portion of your pension is paid to your spouse if you were to pass away, and another portion is paid to your kids if they're still dependent or still in full-time education. Okay. Why this is important is the spouse's benefit in particular is paid before retirement or even in retirement. If God forbid you were to pass away, half of your income or the pension that you would have built up will go to your better half. So these are the benefits that you already have in place. And I suppose what we like to do with our clients is have a look at how this fits into your finances overall. So everybody here will have different saving goals, different life cover goals. You might maybe want to look after your family if God forbid anything was to happen to you. It's important you know what you already have at work. The very same as if you're concerned if you're out on long-term sick leave, what will pay the bills. And also the big one is what income someone's going to have when they retire, because I know many people dream about the day they're going to stop working. It's about making sure that you have enough there to do what you want to do in retirement. So we're going to give you a couple of examples here, okay? First of all, this is an example of the different schemes that you might be a part of in the public sector. So there's essentially 4 main schemes. So what dictates what scheme you're on is when you join service, okay? Essentially, this is an example of somebody, a public servant, who is retiring on a salary of 50,000 and they have full 40 years of service. The red bar on the left-hand side shows you what their salary is the day before they retire. Now, the first green bar that says 25 grand, that's the pension someone would get if they were on the pre-1995 scheme. This is essentially the gold standard scheme in the public service. So if you joined before 1995, essentially what happens is they give you half of your income as a pension for the rest of your life. There's a big change then from 1995 onwards. The next change was from 1995 all the way up to 2013. There's 2 schemes built into this one. So essentially what happened here is they introduced the state pension. So the same person who's after earning 50 grand just at retirement with full 40 years of service, instead of 25 grand of an income, they'll now get an income of 11 grand for the same salary and the same years of service. But the reason why that salaries or the income has gone down to 11 grand is because you're now entitled to the state pension. So the state pension is roughly 14 grand a year, and that's what will bring you up to that extra 25 grand compared to their colleagues before you. But the only issue there is the state pension is paid at a fixed age. It's paid at age 66 at the moment, and it's very likely to be moved out. So essentially, you may be in the situation, if you joined after 1995, that if you retired at age 60, you will only get your pension from work, and you may have to wait a number of years before you get that extra bit to top it up. The very last bar then is somebody who is on the post-2013 scheme. Again, this is one of the reasons why Rebecca would have advised people in this situation or on the scheme in particular to look at what your pension is going to be, because they brought in another change here. And the big one is where they career average your income, which essentially means that the salary you were started on all the way up to the salary you finish on, they take an average of those salaries, and that's the figure they'll use to calculate your pension. So in essence, what happens is you come out with a lower pension in retirement for the very same service and the same salary at retirement. This here then is the lump sum. So the lump sum is very straightforward for many. So anyone who joined before 2013, this is the same example. Someone who has an earnings of 50,000 and full 40 years of service. The left bar, if you see the 75 grand, is the lump sum that that person will come out with. So it's 1.5 times your pension, or 1.5 times your salary, sorry. The next 37.5 grand is that same person, but say, for example, they worked half time. So they come out with 20 years of the pension. So they get half of the lump sum. The two bars on the right-hand side then are for anybody who joined post-2013. You can see here that because of the career average salary for the same service, you're coming out with a slightly less lump sum compared to someone with full service beforehand, and you come out with a slightly less lump sum if you have half service as well. So again, I can't reiterate enough that everybody here will have joined probably at different times, have different service, and have different goals in retirement. So that's why it's important that if you feel like you're not going to have enough, or you want to look at boosting up your benefits, that's what those 5-minute screening calls are for. Okay. So we had a look, fast forward into retirement, and we had a look at see how much somebody would actually need just to survive. All right. And I suppose pay your bills and do everything that you might want to do in retirement. So if I just have a look at this, right, the main outgoing for most people in retirement is going to be your food and your groceries, like anything else. So that 7,000 figure is anybody who spends 20 euro a day on food. So it's not eating out every day. It's not doing, again, your coffees in the morning. It's not going out at the weekends. It's essentially just spending 20 euro a day on food. It equates to just over 7 grand a year. And when you tie everything else into it, your household bills, you might go on one holiday a year. You might just do a little bit of driving around just in retirement. You pay your home, your life insurance, and all those kind of bits and pieces. It looks like somebody will need an income or a net income of 21 grand a year. The reason why I say net income is because the taxman, unfortunately, does not leave us alone in retirement. So he gets his bit as well. So if you want to have an income into the household of 21 grand, you'd probably need to have a pension income, a gross income of closer to 30 grand a year. Okay, so I'll pass you on to my colleague Georges.
Hello, everybody. So I suppose, John, you touched on something very important there, and that is the fact that, Taxman does not leave us alone in retirement, but a lot of retailers do not leave us alone in retirement. Like I tell a lot of my clients, the only thing that really changes when you reach retirement is that your income drops. Circle K will not charge retirement rates per liter. Tesco would not charge retirement prices for groceries. So I suppose preparing for retirement, I suppose, means also taking this into account. Now, what we have here on the screen is essentially what the average civil servant with 32 years of service and a final salary of 52,000, 379, and in this case, retiring with no plans in place, so no pension provisions. So if we just have a look there, what their average income it would be as a pension in retirement. Okay, so 9,376, and as we saw in the previous slide, the average, the net spend is 21,282. But let's say, for example, this same person put a plan in place where they're putting aside 100 net per week into their pension. They can effectively bring that up to 20,282 per annum. Now, I just want you guys to take that in for a second, because again, I know what you're thinking. How do you go about doing that? And we're going to touch on that in the next slide. Now, for most of you, you may have heard what the ABCs are. Some of you, you may not know what the ABCs are. And I suppose that's not a bad thing. The ABCs are the most tax efficient way to maximize your pension benefits, your retirement benefits, to essentially maximize your tax-free lump sum to buy additional pension benefits in retirement. And the beauty of this for yourselves in the public service is that there are so many different advantages. You can pay this through your wages. You receive tax relief at source at 20% or 40%, which I'll touch on in a moment. You can make regular or lump sum contributions into the AVCs, so they're flexible. You can also increase, decrease, your contributions, because we know, listen, your situation changes at any time. Now, the funds are invested, so they're not just sitting there. Now, again, I know you may be wondering as well, if you're saving into, it's not like saving in the bank, because, you're looking at getting returns based on your term to retirement, which is another advantage that you have by availing of the group scheme and the public service as well. Now, we can run through with you what that would look like for yourself on an individual basis. The charges vary for the AVCs. The good thing is there are no upfront fees for setting up the AVCs for yourself in the public service. So essentially, these charges are based on your term to retirement, but they vary for everybody on the call. So on an individual basis, we can show you what that looks like for you, and then you can make an informed decision. So if we move on to the next slide there. Now, in this example, and this is something that I'd really like everybody to take on board here. This is an example of somebody who is getting taxed at 40%, at a 40% tax rate on their wages. Okay, and they decide to put in 100 net into, let's say, per week, for example, or per fortnight into the AVCs. What that would look like is that it would be costing you 100, but what would be going into your AVC would be 167. So by putting in that 100, you've saved 67 euros. If we just go back to that slide, you've saved 67 euros in income tax. Now, we believe these taxes are better off in your back pocket than they are in the taxman's. Now, for those at the 20% tax relief, if you put in 100 euros net into your AVC, whether it's per week or per fortnight, 125 goes into your pension. So you're saving 25 euros in tax for every 100 that you put into the fund. Does it make sense to put a plan in place? I'll leave that question to you. Now, if we move on to the next slide. Now, the 5-minute screening call my colleague Rebecca had spoken about, what I would say in relation to that is, look, for some people here, it may not be the right time to put a plan in place. For others, it may be the best time to put a plan in place. But with the 5-minute screening call, we can stress test with you what it is that you would need to do to bring up your benefits to the standard that would allow you maintain a good standard of living in retirement. And if it is that it's not the right time, that is also fine. Now, there's the QR code on the screen. What I would say, just hold up your camera to the QR code, and that would actually the link would actually just pop up, and you can actually just fill out the details and submit, and we will give you a call to schedule, that and have that screening call with yourself to see if a consultation would even make sense. And we're just going to leave that on the screen there for a minute or two, just so everybody can, for those that want to avail of this, can just use their cameras and get onto that form.
I suppose, George, if I just make a quick point as well, when we're going through the consultation with someone, we always look at how the AVC will be drawn down, because I think the tax relief is lovely at the start, but it could be one of those cases where it might not make sense for you. All right. Yeah. So we always look at what the plan will do for you now, but more importantly, what it'll do for you when you get to walk out the door and enjoy retirement. So it's very important you look at both.
Exactly. And as well, just in relation to that, our job is not to push for the AVCs. Our job is to highlight the advantages of the options available to you, the advantages and disadvantages, so you can make an informed decision based on the information in front of you, as John just said.
Yeah, 100%.
So if we move on to the next slide. Now, again, I know we've talked a lot about your main scheme. We've talked a lot about the pension, your savings. We've talked about, the death in service. But for some people here, it may be none of those that those, neither of those may be your objectives. It may be that you're at the stage of applying for a mortgage. You know, you've just found a property that you'd like to go for. You're saving for a mortgage. You're within a year of applying. We do have a mortgage department. And if it is that mortgages is the priority for yourself, again, what I would say, just fill out that form and submit. And essentially, we would have our mortgage department contact you to discuss your options. For those who are thinking of switching their mortgage as well, there are a lot of options available to yourself through our mortgage department. We do have a few lenders on board. And I'm just going to leave this on the screen there just for a second as well. Just a few different options that are available to yourselves. You know, the 3.6% interest rate with Avant. You know, the way interest rates are going, there's a lot of fixed options available for yourselves as well, just to give you that peace of mind, you know, for the long term. Okay, so the quiz. And I'm just going to say, for everybody, you know, who's getting involved in this quiz and wants to win the prize, it will go to the person who gets this right. Okay. And can we just have, so.
Very sorry, George, as we're having some technical difficulties here. So.
Well, I'll ask the question now before we change the slide. What is the average service of a person retiring in the civil service? Okay, we have one answer already, and we do have a winner. And our winner is Jenny Greener. So Jenny, you have won a €100 One for All voucher. So the answer is 32. You are correct.
Congratulations.
She was.
I hope Jenny didn't spot the answer there.
She was quick on the
keyboard. Congratulations, Jenny.
So Jenny, we'll have your details. We'll be in touch anyway, because you would have RSVP'd. So one of ourselves will be in touch to arrange the delivery of your voucher. So well done.
Now we're going to take just a couple of quick questions, but then we may not be able to take all the questions, because I know they're going to come flying in. What we're going to do is, on an individual basis, we will be able to address any questions that you do have, you know, when we have the screening call with you. So we'll just take the first couple of questions coming in to the Q&A box. So if you just pop them in the Q&A box, not the chat box.
So hold on, let me check here. Sorry, no.
Okay, so we have the first question. So do you do self-build mortgages or buying only? So what I would say in relation to that is that it's something that our mortgage department would be able to discuss directly with yourselves. Now, we are financial advisors, obviously, and we deal a lot with the public service main scheme benefits, but we do have mortgage specialists that would be able to address that with you.
Yeah, and Ross is our mortgage advisor. He has advised people on self-builds and what rates to go for and everything like that. So there's loads of options out there on the mortgage side of things. So somebody, yeah, sorry, George, I just got to say, next question here is somebody who asking about professionally added years. So George, would you explain to them what that means? Because some people may be entitled to the professionally added years and some people may not.
Of course. Now, professional added years, some occupations would qualify for professional added years because of the length of time that it took you to train or qualify for your position. Some professions would qualify, some professions would not. When we sit down with you on an individual basis, we would actually be able to establish with you whether your occupation qualifies, and if so, how much of those you qualify for.
Yeah, absolutely. So it's there as an advantage to somebody who had to train for a long time, as George mentioned. Our next question then is in relation to paying tax on your weekly pension. So unfortunately, as I mentioned earlier on, the tax man is the one thing that never leaves us alone. But essentially, there's different tax bands when you retire. And for the majority of people in the public sector, they'll probably pay very little to at least the lower rate of tax, because as you can see, the average tax or income in retirement is $9 grand. And unless you go over 42 grand a year, as a, say, someone who's singly assessed, you won't go into the higher rate of tax if you're drawing down an income in retirement. Now, there's ways of kind of moving those things around. If you're married, you can be jointly assessed and move it up to 52 and down to 33. So this is kind of the forward planning that we would do during the consultation.
There's a good question here. What information do we need to gather pre-consultation? So just looking at that there, if you do wish to engage in a financial review and sit down and review your own circumstances, what we would ask for you to do and send on to us in advance would be your breakdown of your service. So for example, if you didn't work full-time from when you started to when you hope to retire, there might be a bit of a discrepancy there. So have a breakdown of your service ready to hand and send on in advance. Alongside that, if you could send on a payslip and then any other policies that you might hold, like if you have salary protection, mortgage protection, life cover, any ideas of savings that you have, some information on your mortgage. So the more information you have about your own finances, the better that we can advise you and make recommendations where there might be gaps or shortfalls. So the main thing is your breakdown of service and your pay slip, and then any other policies that you might hold.
Now, I am cognizant that the questions are flying in. We've got almost 100 questions in there. So essentially, what we are going to do is we're going to, for those that are use the QR code, we are going to be in contact with yourselves. Now, we're going to have to do this on a first come, first served basis, just because the volume of the requests that are coming in, and we will then look at scheduling individual consultations for yourselves, in which we will be able to address your questions in greater detail. So we're just going to do that for each person individually. Okay.
Yeah. Obviously, everyone is very, very, very interested in their pension tonight. So everybody's asking loads of great questions. So what we might do is we'll take a copy of these questions as well, and we might come back to everybody that's asking them just to make sure we're not missing anybody. Because we've had a lot of questions coming in there I don't think we'll be able to get through them all. It's great.
Yeah.
And lastly, there is no consultation fee. I know that was just one last question, just because it's very quick to answer. There's no fees or charges for your financial consultation, and how you arrange it, as we said, is through the QR code. So what I might do is pop it up on screen just for another minute, just for any of those who didn't get to.
Yeah. While we're just leaving that up on the screen, and there's a couple of questions in relation to how people draw down AVCs. I saw one: do you draw it down as a lump sum or do you draw it down as an income? It's a brilliant question. Essentially, when people are drawing down AVCs, you top up your lump sum first if you don't have 40 years of service, or if you have additional non-pensionable income. And then what you do with the balance of what's left over, if you have some left over in your AVCs, it goes to top up your income. So again, everybody will have different goals. Everybody, you might have some person who's very close to retirement who just wants to top up their lump sum. But for the majority of people who have a long way to go to retirement, they'll try and surpass that and build a fund for retirement. So it's a very, very good question, but it really does depend on your service and what scheme you're on, when you want to retire, and all that kind of stuff. So I think the message I suppose we would often say to our clients, and we probably say it a lot, is that sit down with somebody if you want to find out your own specific situation, your own pension, and just to make sure that's going to be enough for you guys in retirement, because I know we all work hard enough and long enough. So it's important that you're just keeping an eye on these couple of bits and pieces, but it'll be different for everybody. I can't stress that enough.
So how do you book a consultation? Just scan your camera over the QR code, your phone camera over the QR code, and that link would just pop up. You just click the link and it takes you straight to the form, and just fill that out. Submit. We will give you a call to arrange the screening call.
Yeah. Okay. And if you can't get the QR code, sorry, George, it's go across you. It's just, I know from some people the QR codes might not work on their phone or anything. We will be sending an email around with a link where you'll be able to book in a consultation as well. So if the QR code isn't working on your phone, we will be sending you a link and you will be able to contact us that way.
Awesome stuff. All right, folks, listen, thanks everybody. It's been a pleasure, and we look forward to speaking with you over the next couple of weeks.
Perfect. Thanks, guys. Appreciate it.
Brilliant. Thanks.
Bye now.